Yo, what's going on, guys? So, some urgent news has come out from UPS. They have slashed their biggest customer's business by 50%. And you know who that biggest customer is? Amazon. This is some huge news. And they literally sent their stock tanking. These are levels that we've not seen with UPS quite literally since like 2020, right? So there's some amazing opportunities that I want to cover in this video and covering some of this news because to me I believe, again, this is not financial advice. I'm just some guy that's sharing his thoughts on the internet. I think there's some massive opportunity with UPS. I think they listen, this is a very smart company. They know what they're doing. If they're slashing 50% of business from Amazon, they're doing something for a reason. And the reason they're doing that is because they realized, and I'll bring it up for you when they had the call where they shared this, is that their CEO clearly said, I can't find it right now, but their CEO clearly said that, hey, Amazon is our biggest customer, yes, but they are not our most profitable customer, right? They send us the most volume, but they're not profitable from it, right? They're not that profitable from it. And you could see Tom said the result of this change will be lower overall volume levels, but improved customer mix at a significantly higher revenue per piece, meaning increased profits. So they also had their earnings, which weren't terrible by any stretch of the imagination. The earnings rebounded 11% to 2.75 per share, beating estimates by 2.53. $2.53, which again, I do believe in the short term, this was just an insane just and I swear this market is just so insane that like any little bit of news just absolutely moves markets. Like I mean, like, I don't think we're gonna like we've never seen before. I don't know if it's because there's so many more retail investors investing right now and that they could send things, sideways, down 15%, like literally in like a day, which is just like insane. Like, look, you could see they're down, 13.5%. When I looked earlier, it was down 15%. Like, it's insane insanity. Now with these kind of massive market moves, we can also get in on a lot of opportunity. Okay, we can see a lot of opportunity. Now, my one big recommendation is always trade stocks that you actually love and enjoy. Right here, I pretty much do option selling, and I want to show you guys how that is going to play out with UPS. Okay, so we're here in our Robinhood app, and what I want to start looking at is some of the cash secured puts, meaning that I want to get in and purchase UPS at a price that I want to buy it, right? I do believe that this is a short term thing, and I think we're going to get back to these 130 levels. Either way, I want to collect some premium. Okay, so right here, I'm going to click Trade UPS Options. From this is the options chain. If this is your first time looking at this, don't be intimidated or anything like that. I'll quickly cover it all here, but that's what we talk about every single day on this channel: selling options, baby, collecting premiums, and rinsing and repeating. That's what we do here. Okay, so if you like that kind of stuff, welcome. Hit the like and subscribe button. Oh, I forgot to mention, one lucky commenter down below will also win a free option strategy call with me. We can talk one-on-one. You can ask me your questions, any of that good stuff. All you have to do, it's completely for free, is drop a comment down below, and one lucky commenter will win that free call so we can chat. Nothing to sell you here. Okay. So we're going to switch over to sell, right? We are selling a put. That means that we are willing to purchase 100 shares of UPS at X price, right? So what is that X price? Well, that's the strike price that you're seeing on the left side. Now, in addition to choosing what price we want to actually purchase UPS at, we need to say when we are willing to do that, okay? And that is called our expiration, okay? Our expiration. So we're going to click that, and I like to go really 30 to 45 days. So let's do this March 7th one, which is 35 days out. And I'm going to start looking at some of these options chains. Okay. So obviously I want to get in at a good price, but also collect a juicy premium for it. Right. So, like, to me, I might be close to at the money because I don't think that UPS is going to like drop like to like 110, but if it does, I'll totally buy it. Right. Like, I'll totally buy it. 115 might be a little too aggressive, but let's take a look at these 110s. Hey, clicking that, this is perfect. This is perfect. So this delta right here is a 0.23. In a nutshell, this basically means there's a 23% chance that UPS will get down to 110, and I will actually have to purchase it, right? But there's a 70% chance that there's not, or about a 77% chance that that's not going to happen. Okay, that's basically what that means. Okay, so what I like to do when I have this up is I like to use a couple other different tools as well. Okay, so again, you can go read up some of the news, go read their earnings report. We're not going to go through all of that. To me, I think this is a classic market overreaction, but you do your own due diligence. I'm just telling you guys what I'm doing. Okay. So I like to go Yahoo Finance. I go to the chart tool. I add in two indicators right here. Click indicators and add in your Bollinger Bands and your RSI. Oh my God, this is a perfect setup. Look at how they're selling this thing off like crazy, right? This is amazing. This is amazing, amazing, amazing. So if you don't know what a Bollinger Band is, it basically tells you the range that a stock using historical data would trade in. Easiest way to explain it, when it hits the top Bollinger Band, it usually retracts. And then if it hits the bottom Bollinger Band, it usually retracts upward. You could see that over time. Now, so there's of course times where it shoots past it, but it usually comes back down to reality. Okay. And look at where we're at right now. We are at the bottom of this Bollinger Band, and we got to get into this because starting to go up. It's starting to go up back into reality space. And this is how you look at your setups. RSI right here, this indicator that you're seeing, this little block right here, that stands for Relative Strength Index. And what that essentially means, it's not confusing. It basically tells you how overbought or oversold something is. If it's below 50, it means a stock is usually being oversold. So we're at a 32 right now. That is that's that's like a lot of people are getting out of the stock. They are selling off, right? And if it's above 50, like in that 60-70 range, that means that a lot of people are purchasing that stock, right? And I like to use these very simple indicators. There's other ones that are a little bit more complex for different strategies, but for basic covered calls, cash secured puts, like we do here on the channel, it's really more than enough, guys. It really is. So for me, when I'm selling puts, selling cash secured puts, I want this my stock trading towards the bottom of the Bollinger Band and for it to be oversold. Why? Because that means a lot of people are selling a stock. A lot of people are selling a stock. What does that mean? All right. Even my 4-year-old daughter can answer that. It sends the stock going down, right? Like it's not that complicated, right? So let's head over to UPS, and we're looking at these 110s that expire on March 7th. Okay, we got a 0.23 delta, really, really nice. I thought it would be higher, honestly. And we can click this little plus sign right here. Now, you're seeing 1.36. Now, options are all in increments of 100, right? So one options contract is 100 shares of a company, okay? So 137, that's per share you'd be receiving as cash into your brokerage account today. So 100 times $1.37 is $137, right? And you could see that right here, right? You're seeing that right here. Now, quick disclaimer, to be able to collect this money, you will need to have at least $11,000 in collateral, right? And the reason you're going to need that money is because you need to put that up as collateral that if, the UPS gets down to 110, you can actually purchase it, right? So I like to use my cash secured put calculator. You guys can download it. It's free. But we like to do here is just add in just to keep ourselves a little bit organized and that we're hitting numbers that we want to hit. All right. So what are we collecting here? Look, our premium went up. It's $142 now. Awesome. So our premium is $142, right? Our collateral, right, is 11,000, right? Because that's 110, right, times 100, right? So we are going to have to purchase those shares. Sorry guys, my mic kind of cut off there. So we would need to have at least 11,000 in collateral. But take a look at this. In just that 30 days, we're getting a 1.29% return on our $11,000 annualized. If we do this trade on a monthly basis, that gives us an annual return of 13%. Not bad. And this is just if you're buying multiple contracts. Now, one thing to understand, the further out you go, right? The further out you go, look, our premium's still jumping up. It's 145 now. The further out you go, the more your premiums will be. So like, let's just close this out real quick. And when it says this max loss here, guys, I know when you get into options, it can be very scary and you see max loss, $10,000. Like, what is that? Well, basically what this is if UPS went out of business. That's your max loss. If UPS went out of business, that's how much you lose, right? That's what that means. Now, can UPS go out of business in the next 30 days? A lot of things can happen in 30 days. I'm not going to be the one that tells you. That's where you have to pick companies that you believe in, you build a thesis around and do. One thing I can tell you, it's never happened to me. Like a company that I've ran cash secured puts and covered calls on has never gone out of business. Okay. And we'll cover what those options actually are right now. So the reason it's saying 10,855 is because you just got paid, $145 in premium. So you could think about it as like you got a little over a share and a half for free, right? Because you're collecting that premium and that cash will be deposited immediately into your Robinhood account. Okay. Really, really, really cool. So a couple things can happen. Right. March 7th rolls around and, UPS is trading at like 110. Your $11,000 will be taken from your Robinhood account and you will now have 100 shares of UPS at 110. Not a bad thing, right? Because it's a company you believe in, and now we can actually go do covered calls on it. I have videos on that. Go watch some of the other content on the channel. There's a whole playlist, option selling for beginners. But then you can actually do the same exact thing on those 100 shares, collect premiums, and sell them at a higher price than what you bought them for. It's awesome. The whole strategy I call quad options, right? It's an amazing strategy for literally 99% of people that don't want to be like staring at charts all day and creating abstract art. It's ridiculous. It's awesome. Okay. The next thing, which is more likely than happen, remember our delta here, where there's only a 0.23% chance of this happening. Most options expire worthless, meaning March 7th is going to roll around and, UPS is probably going to be trading at like 116 or the same price, or it has a massive rebound and nothing happens. Your option expires worthless, that's called, and you walk away with your premium. And that's it. Those are the really the two options. Now you do have a third option, and this is where you manage your cash secured put. I do like managing my cash secured puts. I don't really manage my covered calls because I actually want to sell my shares because you make a lot of money from the appreciation sale, right? If you bought, let's say I did own UPS at 110 and then I open up a covered call that I'd sell at 120. I actually want to sell it at 120 so I can make that money, right? Like I make that difference on 100 shares. You see what I'm saying? But for cash secured puts, I usually, once I capture about 80 to 70 to 80% of the premium, I'm usually going to close it out. So what does that mean? Well, let's say today, obviously, UPS is just getting absolutely beat up with the news about Amazon, right? It's plummeting 15% this week. But guess what? What if next week some news launches or whatever happens and it sends the stock up 15%? Well, if that does happen, your option becomes less valuable, right, to the market, right? Because it's less likely that it's going to drop back down another 15% again. So what the market will say to you is it will say, hey, you know what? You can close out this option if you want. It'll just cost you, $20 or, let's say $20, right? So what I like to do when I look at that and how I decide if I want to do it is that means you're going to have to give back some of this premium. So let's say it's going to cost you $20 to close it out, right? So it's going to be $122 that you will receive, but $20 that you had to give back to close out this contract. Your collateral is now freed up to go do this strategy on other stuff, right? That 11,000 that is tied up with this if UPS got down, right? Your return is 1.11, so you're losing a little bit of return, but let's say in 2 weeks this actually happens. So now you're at 14-day expiration and take a look at your annual return, what it did to it. You went from an annual return here. And this is why I always love to look at annual, because that tells me if it makes sense to close it out early or not, right? I'm at an annual return of 28.92% versus 13%. So to me, that makes sense to close it out early. Now, if it's telling me, in 2 weeks from now, hey, you can close it out, but it's going to cost you $100 to close it out, and that means I only get to keep $42. Obviously I'm not going to do it because my annual return is less, is much less if I close it out. So that's why I like to at least capture 70 to 80% of that premium, close it out, so that frees up my collateral to go run this strategy on other companies. You see what I'm saying? Like it's a lot. It frees up that capital. So then, because there's always stocks going down, guys. Like that's at the end of the day, that's what's happening, guys. I hope this video makes sense. It was valuable to hit like, subscribe. Don't forget, drop a comment down below. To one lucky winner is going to win a free option strategy call with me. Nothing to sell here. It's literally with me personally. You can ask your questions. I can go over the strategy in more depth, give you any additional resources or watch lists that I have to help you out. Again, everything is free on this channel. No courses, nothing like that at all. And I do appreciate any likes, comments, shares, or anything like that. Guys, I will see you tomorrow.